Welcome to this latest gold analysis video where I'm going to be discussing what happened to gold prices this week. And I'm also going to go back to the performance in 2022 because there's some things that are not widely known what happened that's relative to the gold industry. So I'm going to talk through this in this video, and I'm also going to be giving you a forecast as to what I think is going to happen next with the gold price. And this is quite unusual because I find at times gold can be very hard to predict. But I have a baseline hypothesis, and I think that I'm going to be proven true. So that's why I'm discussing this on the video so that you guys can see what I think is going to happen. So let's set a background, and what happened this week is to do it. The seeds were sown in 2022, and there's a few things that I want to discuss because these build up to what we're seeing at the moment, because obviously gold has performed very well so far in 2023. So in dollar terms, gold posted 7 consecutive monthly losses last year. And this is something that's not been seen for generations. In fact, it was 1869 the last time that gold had a record losing streak like that, where it posted at least 7 monthly consecutive losses. But interestingly, and this is sort of to do with what I think is happening in the market at the moment. So the World Gold Council, they report on several things to do with central bank purchases and disposals, and they reported that in 2022, so last year, the central banks accumulated over 673 tons, and this was the most that central banks have bought in a yearly period since 1967. And for those of you that follow gold and know your history, you'll know that this is quite important because in 1967, the world was on a gold standard. Nixon took the US off of a gold standard in 1971. So that means that last year was the first year since the world was on a gold standard that central banks bought that amount in a single year. And Q3 22 was a record for gold buying as well by central banks. Central banks had never bought that amount in a quarter before. And I'm going to actually do a video on this because there's quite a few reasons as to why that will be the case. So look out for that on the channel. Make sure you subscribe if you don't want to miss that. We're just going to have a brief message from the video sponsor.
Orunum is a bullion company headquartered in central London, supplying low premium bullion and rare world gold coins that are not seen elsewhere. Orunum publishes market intelligence for gold investors, including free weekly downloadable reports that explain how the metals have performed against other commodities and currencies. An interactive gold heat map is available on the Orunum website, with a live view of how gold is performing against every currency in the world. Free online courses are also offered, featuring topics such as why prices rise over time and why the UK sold half her gold reserve at multi-decade lows. Visit the Orunum website for full details.
So I've actually pinched these graphs from the Orunum weekly gold reports or precious metal market reports. And you can see that in 2021, the calendar year performance of a lot of the main tradable commodities, and you can see that gold lost maybe 8% in 2021. 2022, and this is all relative to the US dollar. In 2022, it was down as well, less than 5%, but it was mainly it was flat for most of the year, but it obviously posted a loss for the year. Gold is actually up 4.4% already in 2023. So you could say that gold has underperformed. I mean, if you look at the performance of the natural gas and oil and some of the other commodities, gold has severely underperformed over the last 2 years. And I think that that's because gold performed relatively well going up to the COVID lockdowns. And it was sort of like signaling that there was going to be problems with commodity price inflation, which is now what we are seeing. Arguably, that's starting to peter out a little bit, and gold is starting to go up, obviously, as we know. But here's some interesting things. So the reason why gold was underperforming is because central bank interventions were depressing the price. Bullion obviously doesn't normally have a yield unless you lease it out. Central banks lease and get a yield out of their bullion, but the average retail investor, you and I, we don't get a yield off our bullion. So the higher interest rates go, economists talk about opportunity costs and things like that, but basically all else held constant, if base rates, so central banks raise their interest rates, that is generally considered bearish for gold. It's not always the case. Gold has gone up with interest rates, but again, this will be another video in the future. Because consumer price inflation kept increasing, gold was actually not going up because the more that inflation went up, the more markets expected central banks to hike interest rates. But what I noticed at the end of last year was that the Bank of England, the ECB, the Federal Reserve, they was all raising interest rates. And at one stage, rates would go up by maybe 75 basis points, 50 basis points, and the gold price stopped falling. And that was really important because that was a little sign that we was at a bottom. And it looks like that is the case now, that gold is starting to rally in 2023. So what actually happened this week? Well, the US dollar was down. It posted a loss over the week. Gold reached an 8-month peak against the US dollar. And this is all off the back. On Thursday, US consumer price inflation fell for the first time in 2.5 years. I think it was May 2020, the last time that consumer prices actually fell in the US. So because of this, it's a sign that consumer prices are starting to come back down, or at least accelerate at a lower pace. And this is why gold prices went up, because as soon as inflation looks like it's coming down, the market won't expect central banks to be as aggressive raising rates. And the market now expects the Federal Reserve to only increase their base interest rate, or the Fed funds rate, by 25 basis points at the meeting. It's actually the meeting's actually a 2-day meeting. It begins on the 31st of January and spills over to the 1st of February. I think we will get an announcement on the 1st of February, and the market expects 25 basis points only, which is a lot lower than what we have been seeing, especially last year. So when we actually dig into the numbers of the US data, so consumer price index increased 6.5% year on year. Core inflation was up 5.7% year on year. But something that not a lot of people track is the 10-year benchmark yields in the US. So this is the 10-year Treasury bonds. So what they done last year was they hit around 4.4% on the 21st of October. And this is really significant because this was actually the highest that these rates got since before the great financial crisis in 2008. Yields are down. Yields actually closed just a fraction above 3.5% on Friday. So interest rates was zero lower bound. So they was just above zero. They've gone up to about 4.3, 4.4%. They're actually coming back down now. So this is always going to help gold. So what is my forecast for the gold price? What I expect to happen is that between now and the Federal Reserve meeting, and incidentally, it's not just the Federal Reserve, it's the Bank of England and the ECB or the European Central Bank, that are scheduled to announce rate increases in the first week of February. So what I expect to happen is something that we call buy on rumor, sell on news. Gold prices, I think, will go up in anticipation of a slowing of interest rate rises. When that rate gets confirmed, let's say that the Federal Reserve does increase interest rates by 25 basis points, which is 0.25%, then I think the gold price will come down. Sort of like a pullback. But incidentally, something that I calculated, based on Friday's closing price, gold can actually go up another 8% against the US dollar before it reaches the previous record high. Sterling, on the other hand, so the pound sterling, gold against sterling is only £10 an ounce away from previous record highs. I think that what we will see is fresh, new record highs for gold against sterling. And the key economic data date, sorry, is as I said, 31st to the 1st for the Federal Reserve. The rest of them are the first week in February. So we'll get the most important one is the Federal Reserve interest rate decision. Then we'll get the ECB and the Bank of England. I'm going to release some very important videos that are going to be quite evergreen. They're going to be to do with gold and interest rates, and also what the central banks have been doing and the de-dollarization in the East. So make sure you subscribe to the channel if you'd like to see those going forward.